Hello and very good morning to all. I'm Mohammed Iskandar Ismadi, CEO of Padini company. This company sells men's and ladies' clothes. Founded in 1975, the headquarters is in Malaysia, Kuala Lumpur.
Good morning to the CEO. I want to ask the question, why is the firm profitability and growth decline in income for Padini company?
So it's about gross profitability. So I'm going to compare for a year 2014 and 15. First, for gross profit margin, in 2014 it was 46%, and 2015 it was 43%. The second one is net profit margin. For 2014 it was 10%, and for 2015 it was 8%. The third one, operating profit margins. For 2014 it was 50%, and for 2015 it was 12%. The next one is return on asset. For 2014 it was 60%, and for 2015 it was 30%. Sorry, I mean 13, not 30. Okay, the last one will be return on equity. For 2014 it was 23%, and for 2015 it was 20%. For the calculation, we can see that profitability in 2014 is much better than 2015.
I have one more question. What is your comment about your liquidity in your company?
So now I'm going to compare the liquidity in 2014 and 15. Okay, for the first one is current ratio. For 2014 it was 2.83 times, and for 2015 it was 2.64 times. The next one will be quick ratio. For 2014 it was 1.43 times, and for 2015 it was 1.69 times. The third one will be cash ratio. For 2014 it was 0.61 times, and for 2015 it was 0.78 times. The next one will be net working capital to total assets. For 2014 it was 51%, and for 2015 it was 48%. The last one will interval measure. For 2014 it was 352 days, and for 2015 it was 307 days. For the calculation, we can see 2015 liquidity is more efficient than 2014.
Okay, I want to ask the question, what do you think about your company asset management?
For our company asset management, I'm going to compare for 2014 and 15 like always. Okay, for the first one it would be average collection period. For 2014 it was 23.24 times, and for 2015 it was 18.88 times. The next one we build account receivable turnover ratio. For 2014 it was 15.71 times, and for 2015 it was 19.33 times. The next one will be inventory turnover ratio. For 2014 it was 2.1 times, and for 2015 it was 3.3 times. The next one will be days sales in inventory return. For 2014 it was 174 days, and for 2015 it was 111 days. The next one will be fixed asset turnover ratio. For 2014 it was 7.25 times, and for 2015 it was 7.21 times. The next one will be total asset turnover. For 2014 it was 1.52 times, and for 2015 it was 1.62 times. This last one will be net working capital turnover ratio. For 2014 it was 2.98 times, and for 2015 it was 3.37 times. For the conclusion, we can see that firm management asset for 2015 it's much better than 2014.
Okay, thank you. Okay, I have one more question. What do you think about your assessment of your company's solvency and leverage?
So about our company assessment for solvency and leverage. Likewise, I'm going to compare for 2014 and 15. Okay, for the first one, debt ratio in 2014 it was 0.32 times, and for 2015 it was 0.33 times. Okay, the next one will be time interest and ratio. Okay, for 2014 it was 57.97 times, and for 2015 it was 40.77 times. Next will be debt to equity ratio. For 2014 it was 0.47 times, and for 2015 it was 0.49 times. The next one will be equity multiplier. For 2014 it was 1.47 times, and for 2015 it was 1.49 times. The next one will be cash coverage ratio. For 2014 it was 68.27 times, and for 2015 it was 51.31 times. And the last one will be long-term debt ratio. For 2014 it was 0.05 times, and for 2015 it was 0.11 times. For the conclusion, we can see that assessment for solvency and leverage in 2014 is much better than 2015.
Thank you.
In a nutshell, performance of Padini company in 2014 was much better than 2015, because in 2015 we faced several external factors such as economy downturn. So we hope in 2016 and other years we will perform much better and more efficient. Thank you.